Hey you! If you are a Forex trader that trades any pound pairs, talking GBPJPY, GBPUSD, any of those, Euro Pound, this video is made specifically for you, and I want to encourage you to stay tuned to the very end. We've got some important updates on the pound today coming at you now. So welcome back, my friends, to another video. Today we're taking a look at pound pairs specifically, and I had some new information that I wanted to share with you that might be helpful if you are focused on pound pairs. A lot of traders especially love to trade on the shorter time frames, the pound pairs, right? The pound yen, pound Swiss, pound dollar, and there's good reason. They actually have a lot of volatility and they can produce some really amazing setups. So in today's video, what we're gonna do is we're gonna look at some pound updates and some data that I wanted to kind of share with you guys because it's kind of important. So check this out with me. So let's go look at some COT data. Now, if you're not familiar with COT data, what COT data is, Commitment of Traders Report, it is essentially a report that has to get filed by major players in the US weekly. And what it does is it tells us essentially what institutional traders are doing on the money side of things. What are they buying? What are they selling, etc. So we actually have this page linked up on the website. You can just head over to a1trading.com. So if you just go to our website, if you'd like to look at this data on your own, just go to a1trading.com. Go to COT data, and this is what we're going to look at. So I wanted to click on the pound with you guys and just show you a little bit of information that came across my the desk this morning here, and I figured it would be a good thing to cover in a video. So check this out. Recently, we've seen a bit of a shift on the pound. So I'm going to scroll down here, and what I'm looking at right now, what you're seeing on the screen is the net positions of institutional traders. And the reason that this matters is because the net positions essentially tell us what investors, big time investors, right? Institutional hedge funds, banks, people who are speculating with lots of money, essentially, what they think about the pound. And why does that matter? Well, it's kind of like one big signal sometimes when you get a lot of institutional interest coming in or flowing out of an asset. And when we look at something like the pound specifically, check out what we've seen in the last few weeks. Since December, or mid-December really, we've seen an increase, December 20th, an increase in the net positioning on the pound. Now, of course, you can still see that the net position is still negative, meaning that there is a lot of short contracts open. This is based on the futures market, by the way. But what we are clearly seeing here is that there is a little bit of a change in direction, if you will. And the reason that matters so significantly is I do think that this has potential to continue to grow. Why is that? Well, the Bank of England had a shift in tone recently that really kind of made me a little bit more bullish after their hawkish statements, as well as their hawkish positioning when they raised rates suddenly. And now investors are watching the pound start to get very strong. So if we, strong institutional interest coming into the pound, that has a lot of boosting effect to pound pairs. Now, what we'll see now is that today prices are pulling back on some of these pound pairs. Here's pound yen, which we're going to mark up in just a second. Pound dollar, pulling back a little bit. The dollar is still kind of strong right now, so it's not given too much leeway. But if we take a look at pound Swiss, this one not yet pulling back. You can see the pound is just killing it over here. But overall, the pound has been strong. So I wanted to talk specifically about things like pound yen and potentially some setups that could be coming into play. So we see institutional money coming into the market. We also see it in the price action, right? You can kind of see this market is trending higher lows, higher highs, very clean uptrend right now. And I do think that there are some opportunities to take advantage of. So what I'm going to do with you guys is we're going to mark up some levels. We're going to mark up some areas where the pound yen, which is one that I've been wanting to take a buy on, looks like it has potential. Now, when I mark these levels, these are not like guarantees that the market is going to fly from these areas. This is purely just an idea of, okay, if I have a bullish bias based on the fundamentals, based on sentiment analysis, by the way, we'll take a look at that in a second. Actually, you know what? Let's take a look at retail sentiment just real quick before I forget, because sometimes I say I'll do something and then, videos are hard, so I forget to go back and do them. So if I go here, let's go look at pound yen just real quick. Pound yen, 82% of retail traders, you guys. Let's get a zoom in on this figure so we can see this box a little better. 82% of retail traders right now are short on the pound yen. The reason that matters is that when we know that the crowd is shorting something, it tends to not be a positive thing. It tends to mean actually that if all the retail traders are trying to short up here, right, that there's very good potential for this market to continue to trend higher. In fact, that's what's been happening for the last few weeks. We've seen lots of traders trying to short, and the market just rallies further, right? So when we look at this right now today, as this thing kind of starts to pull back, you have a lot of retail traders who are celebrating. They're happy, right? They are smiling right now after this market is starting to come down, because again, we know institutional traders are long, or at least they're picking up long positions in the last few weeks, whereas retail traders, what are they doing? They are shorting this thing. So they're happy to see this come down. They're like, woohoo, we can make some money now, or at least maybe get out of our terrible positions. But that's where I think it's kind of a trap, right? That's where I think it's very dangerous when you see this situation to be like, okay, yeah, it's coming straight down, when you know that institutional traders are net long and you know that retail traders are trying to get bailed out, whereas that's kind of a dangerous spot to be in. So as we pull back, that's where I'm saying, okay, maybe there's some opportunities to pick up some pound yen long. Maybe we'll take a look at pound dollar in just a moment, but this is kind of my top pair at the moment. Just idea being, okay, strong Bank of England, rate hike expectations. We have institutional money coming into this, flowing into this in the last few weeks. And we have retail traders trying to short the crap out of this. So you put all that together and you say, okay, well, isn't this a kind of a head and shoulders, Nick? This is a question that I got from a member inside of the private group today. Actually, somebody asked me, you know, Nick, isn't this a head and shoulders pattern? Well, it could be, but what I like to look at is this is kind of like your neckline, right? So if you're looking at this and you're saying that's a head and shoulders, it's coming down. Well, the thing we have to see is, sure, it could be a head and shoulders and we could see some short-term momentum, but before that happens, we'd probably want to see this thing break out and kind of make a significant lower low and actually break structure and show that there's some bearish short-term action. Right now, we are just hovering near support levels. And so you have to be very cautious that you don't trick yourself into thinking, oh, it's the top, it's going to come down. I mean, it could be, right? I'm saying it could be because you never know with 100% certainty. Something could change in the markets and we could see sellers come in very aggressively. But what I'm saying is that likely, based on all of the probability things that we talked about, right? Institutional interest, we have retail sentiment at extremes. You put all that together, I think that this thing more likely finds support in one of these areas that we're talking about and continues its overall uptrend. So I think that putting that all together, that gives us some opportunities to look for some high probability, good risk reward setups when looking at pound yen. So where could we look for opportunities? Well, what about something like this? Maybe if you're like a shorter term trader, you could look for just a move back to the highs. For me, as a bigger swing term trader, I'd be looking for, a swing trade trader, I'd be looking for more upside overall than just a return to the high. But there's nothing wrong with looking at this. I mean, that's a significant move. That's 146 pips. That is nothing to squawk at. So, that's opportunity idea. There could be something down there if you're looking for confirmation. And then if you're looking for a deeper retracement, which actually has my interest as well, a bigger pullback there, a little bit of a deeper move could put stops underneath structure here. That's risking 70 pips or so, with the potential to, target being at 200 and something pips if you were just going for the previous high. But if you guys know my trading style, what I'd be personally looking for is to trail stops should I enter a position. So, maybe I take a trade here and maybe it works out. Maybe the thing is, what I will often do is I will set up a few different situations in which I can see myself going long. And oftentimes I will try more than once to get a position, because the thing is with my trading style, right, I'll put stops on my thing that are kind of tight. So the truth is, if price comes down and tags me out, that could be a little bit frustrating, but maybe I get that second entry and that second entry goes the way I'm looking for, right? So I really don't think that there's anything wrong personally with entering more than once if you feel the need to, if you have two different levels that you like. So that's why I oftentimes, when you see me do these videos, I'll talk about more than one level that I am watching on the pound yen. Now, that idea, I do want to say this, both of these are fairly aggressive entries, because look, we are still kind of extended on this move. You look at the RSI, we poked up real high on the RSI. We had real strong momentum to the upside, which I do want to be a part of. And so, you have to be very cautious, because if you're going to be buying into a move that's kind of already been playing out, you have to be cautious, because, the snapback can be aggressive, right? You can see a big slip. So that's why I'm putting stops on my trades. That's why I'm managing risk on any position that that I choose to take, and I'm looking to risk small relative to potentially a bigger gain. The idea being that, yes, this thing is extended, but if this momentum continues to run, right, it could be very quickly a great risk to reward trade. And that's, as always, what I'm trying to do with my trading. I'm not trying to predict the market's every single move. What I'm trying to do is find opportunities where the reward is well worth the risk that I have to take, right? Because you have to put risk on if you're going to be taking trades and trying to make money. You don't get to have reward without taking risk. So make sure that when you take trades, that the reward it outweighs the risk that you have to take and put onto your account. So let's take a look at pound dollar. Here's another one. Pound dollar still very strong and pulling back here today with a little bit of dollar strength assisting this. Where could we see pound dollar end up today? Well, if continues to the short side for the short term, right? If we continue to see the dollar be strong today, which it is, and the pound kind of pull back, we could be headed back down to retest the low of this channel that we've been watching. This is a regression trend line, by the way. I use this on TradingView. I find it very helpful just to grab, the average regression line of a trend. We could draw this. Let me make sure I do this correctly. From the start of this trend until now, you can kind of see we've been oscillating between these two levels. So if price does pull back a little bit more here, there could be opportunities if you are long biased on the pound. We could actually look at this on the 1 hour chart just to get a closer look and see, you've kind of got this impulsive move recently where you had this jump, right? And so putting that together, you've kind of got this level potentially coming into play where you're starting to pull back to levels of support. You've got that 61.8. It's not the prettiest trade, I'll tell you that, but I still think that with the pound strength that could be coming, it's still worth watching. So if you like the pound dollar long, maybe looking for pullbacks here today. If you're more aggressive, you could look at the 50 or the 38.2, but that's going to depend on your strategy and how you personally trade. But if you trade similar to me, I'm looking for momentum, pullbacks in that momentum backed by fundamentals and sentiment analysis, kind of pulling it all together and like weaving a basket, if you will, of different factors. So that's kind of what I've got for you. If you enjoyed the video, subscribe, hit that like button, and we'll see you next time. What's up, guys? Thanks for watching today's video. There are more videos available on our channel here and here, so go ahead and click into that for some more free trading content. With that said, thanks for watching. We'll see you back next time.